Recording now. My good brother Carnell.
What's going on, my man?
Carnell Newsome, the
Good to see
man,
you again, man.
the myth, and the legend.
I don't know
All
about
in
the
one.
legend, just a good person.
You're not the
You're
legend?
not a legend,
You
man.
a legend, man.
Appreciate you, man.
You are a legend if
feeling that way.
you want to say it or not.
Yeah, just filling out God's purpose. That's it, man.
Yeah. That's awesome. That's awesome. So Carnell, man, we met, maybe about a year ago, and you've been an asset to me ever since, ever since I've met you, as far as just educating me and, just being somebody that I could really call on and, ask questions or really ask anything, So I truly deeply appreciate you. I appreciate your experiences and your knowledge that you pour into me. And yeah, let's give the people some education about financial literacy and
I don't think
credit,
I
and
don't think they're ready, man.
I know they're not ready for what you got, but let's start it off slow because
Yeah.
I do this podcast, these interviews, so I could be able to explain different topics, to not only my clients but the people I'm amongst, and I could be able to explain it to a third grader. So I
Mm,
want to be able to break these topics down, and really
yeah,
give these people some knowledge and some advice that they could take with them for the rest of their life, And
absolutely.
I consider you a financial literacy guru, a credit expert. So I don't have you for long, but I want to, take what I could right now and run with that. So without further ado, let's talk a little bit about credit. What is credit?
Yeah, credit's everything. Credit determines your character, determines who you are as far as, your worthiness.
Mhm.
It's everything, determines how someone wants to work with you,
Right.
turns how responsible you are. So credit is pretty much everything.
hmm Credit is, if you don't have credit, man, you're not doing anything in life right now because credit is your financial report card, basically. And I
Yeah.
learned that from you.
Hmm.
So if you don't have credit, if you don't understand what credit is, or if your credit is bad, just know like you're doing bad in life. So, we need to get educated to put us on a higher level. So tell me a little bit about financial literacy. What is that? Is that different from credit or
Yeah,
what is
definitely,
that?
definitely. I always tell most people this, Brandon. During my whole journey from being in the industry since 2005,
hmm
19-year run, that credit is just a band aid. Credit repair is just a band aid. If you fix someone's credit and you don't get to the problem of what got them in that situation,
Right.
they're gonna end up rinsing and repeating and making the same mistakes that got them in that situation.
Yeah.
So, with the financial literacy, educate them on how credit works, how financial literacy works, teach
hmm
them how to budget, how to save, how to prepare to pay the bills in time.
Okay.
That's what's going to help someone to get good credit and keep that credit.
That's the education behind the credit.
That's correct.
Okay. Okay. So, what is a credit score? Is a FICO score different from a credit score? Is it the same thing?
Yeah, there's all types of scoring modules that's out there.
Okay.
Banks use different various score modules depending on what you're applying for. There's the Vantage score that's widely used by Credit Karma and some lenders. And
hmm
then most lenders are using your FICO score.
Right.
That's what they're using. And the reason why I said the different scoring modules out there, FICO has several versions. They have a credit card score, they have a auto lending score, they have a mortgage score. Um, so it's really important that people really know, to be honest with you, what to do to have an excellent credit score on all platforms.
Right. So you want to have an excellent credit score. So that means that there's different elements going into your credit.
Yeah, absolutely. There's five major contributors that really drives that credit score.
Okay.
And if you master those five key components on a monthly basis,
hmm
no matter what platform you're on, your credit score is going to be excellent if you follow the rules of the game.
Okay. So there's there's different there's different elements into that in itself because there's five different factors that we're looking at, but there's elements as far as the 30% rule or just how you approach those five elements, correct?
That's correct.
So what are the five elements to start it up?
Yeah, the first one is your payment history.
Payment
Your
history.
payment history is the makes up 35% of your score, is the largest chunk in those five elements that really counts towards that credit score
Hmm.
makeup. And then the second one, and most people get this wrong, is your amount owed. It's your
Amount owed.
utilization,
Utilization. Okay.
right? For credit cards. And the reason why I say most people get it wrong is because they say that you don't want to keep your credit cards no more than 30%.
Right.
So if your limit's $1,000, you don't want to keep no more than
300.
$300
Hmm.
on that credit card at any time, because anytime you're carrying a balance on it above 30% by the statement date, typically you're going to lose points.
By the
But
statement
by
date.
the statement date, which is so important. I'm glad you caught that,
Hmm.
because there are three dates
Right.
that people need to keep in mind.
Hmm.
The first one is the statement date,
Hmm.
second one is the reporting date, and the
Okay.
last one is the due date when it
Right.
comes to credit cards. And most people are programmed and taught to pay your credit cards, by the due date,
By the
which
due
is
date.
good, right? Because it's
Hmm.
satisfied for them going late and having a late payment.
Hmm.
But you really want to pay your credit cards at least 72 hours, which is 3 days before the actual statement date.
Before this statement
That's
date.
correct. And your statement date is also known as the reporting date. So whatever you're carrying as a balance on that credit card by that date is going to dictate how your score is going to fluctuate.
Gotcha. 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 So what if you have a zero balance on your statement date? Is that a good or a bad thing?
You know what? It's a good question. The credit companies that you do business with,
Yeah.
there's no law that says they have to report anything of yours at all.
Right.
That's why when you look at your credit score, you have three different ones.
Hmm.
They all three different on different ones. Some creditors report to all three,
Hmm.
some report to a couple, some report to any. So if
Okay.
you're playing a game where you're carrying 0%, like you're just paying it off every month, um, what's to make them want to report? They're not making any money off of interest off of you. So I tell
Okay.
most people that if you plan on paying your credit cards down to zero, leave like 1% on that credit card.
Have
Don't pay
okay.
it off.
Have 1%
Have
there.
1% there.
Okay. So is there a wise age to start your credit?
Yeah, I recommend, like, depends on what they're looking to do. So like, if you have kids
Hmm.
and your credit's good and you have like a long credit history, we'll get into that next.
Hmm.
It's okay to add your kids to your credit cards if you're paying your bills on time,
Right.
right?
Right. And that's called a certified
Piggyback it.
user
It's
or
authorized user.
authorized user.
Authorized user, right?
Okay.
So when you add someone to your credit card, maybe they're at the age of 16, we know that, when they turn 18, they may be eligible for financing.
Right.
So
Right.
when they
Right.
do turn 18, now they got 2 years or longer of credit history reported on their credit profile. Now they can get in the game. They can leverage the credit to buy things like real estate,
Hmm.
right? We don't want them to go out there and get in trouble, right? We want them to leverage their credit to buy their first maybe investment property,
Right.
things that's going to bring in generational wealth.
So speaking about younger credit utilizers, what what to look for in a credit card or a secured card? Because I know that's one of the first things that
Yeah,
credit card users get.
absolutely. What I tell people to do is this: is you can go to Nerd Wallet.
Okay.
Go to nerdwallet.com.
Hmm.
You can Google it, however you want to do it, and look at the top best credit cards for points, rewards. That's what you want to do. You want to get those credit cards, give you those cashback rewards and points.
Okay.
And then what you want to do is you want to use those credit cards. You want to use them and then pay them off as soon as the bill posts with your debit, right? This
Okay.
your debit, start using the credit.
Hmm.
So use the credit card as much as you can, swipe it, pay it as soon as you can so you can keep the balances low,
Right.
rack up those points. And here's the reason why. A dollar saved in any economy, even a penny saved, is also a penny a dollar earned,
Right.
right?
Right. Right.
And then also with those points and rewards, you can use it towards, gifting. You can use it towards travel. You can use it to pay your bill.
Yeah. Is you getting paid for using your money,
You get paid
basically?
for using your money.
Yeah. Yeah.
And that's what the wealthy people do. They use OPM
Other people's money.
or they use OPC, which is other
Other
people's
people's
credit,
credit.
right?
Okay.
That's how they get ahead.
Yeah.
But we're not talking things. So the reason why I say that for is this: debit card. I mean, those secured credit cards. I'm not a big favor of them,
Hmm.
right?
Hmm.
Some people are like, why not? And here's the reason why. When most people get a secured credit card, they usually put down whatever they can afford.
Right.
Not too many people have a lot of money saved.
Right. And it's
And
not enough. Right.
Right.
Go
So
ahead.
they put down usually like $100,
Mhm.
$300.
Yeah.
And guess what? The cost of gas right now,
That'd
like,
be gone.
yeah, be gone,
And
right? You'd
your
be
utilization will be over the 30%.
over 30% easily,
Easily. Easily.
right?
Yeah.
And then it gets even like, like better. Now you go apply for another credit card, they're going to give you another credit card equal or greater to what you've been working with. So if you have $100 secured credit card or $300 one, your next credit card,
They'll
if
give
it's
you a
unsecured,
300 or
it's
a
going to
hundred
be
dollars.
they're going to give you equal or greater.
I didn't know
And
that.
we're going to go. We're
So
going to go
that's
with
why
that.
people have such low credit cards.
Right. Have a
Oh
low
my
limit. So I
goodness.
tell people, was this, Brandon? I say, hey, listen, this is what you do. If you're not financially stable, you don't have a lot of money, add your
Mhm.
rent to your credit.
Your rent?
Add your rent.
How do you do that?
Your rent is usually something that people pay on a monthly basis. It's
Right.
a big dollar amount,
Mhm.
and they ain't getting no credit for it. So there's programs out there like Self Lender, Rental
Mhm.
Pharma,
Yeah.
Rent Reporters. They can
Yeah.
backdate it. It can go back as far as your move-in date. What if you've been rented for 10 years
Oh wow. On Self?
on Self?
Okay.
Some of
Okay.
these
So
things.
Self is a good app to use.
Self is a good app to use. You can add your electric, your cable, your cell phone, your auto insurance. That's 4 or 5 things that's boosting your data points. It's going to boost your credit score.
That wouldn't be reported otherwise.
Correct.
There you
Now it
go.
gets even better. You go to a credit union,
Mhm.
establish a relationship with them.
Yep.
Credit unions are all relationship driven.
Right.
So you go there, you get a check-ins, you get a savings, you put down maybe a couple $100 in the check-ins, a couple $100 in the savings. Then what you do is you got a little bit of money saved,
Mhm.
you put down a little bit of money towards a secured loan,
Okay.
500 or 1,000. Pay that baby off in about 90 days. And then once you pay it off, go back to the same credit union and apply for a credit card. Guess what they're going to give you?
So they're gonna give you that amount?
They're going to give you a credit card probably with like a $10,000 credit
Really?
or higher.
Because you built those relationships and you did
Because
it that
because
way.
credit unions is based off of relationships.
Okay.
Banks, institutions, Bank of America, Citi, all these other banks, they're out there, Chase. They're institutions. They're fee driven.
Yeah.
It's all about the money.
Yeah.
Credit unions are nonprofit, made up by the members. You can go to a credit union, ask them, say, hey, do you guys, offer any secured loans, pledge loans? And if you don't have money to put down for it, no worries. As long as you got those 5 things being reported, you have a check-ins, you have a savings, you maybe have a direct deposit. That's
Mhm.
3 relationships there.
Okay.
Now, don't, how could I say it? Make sure when you apply for the credit card, have those accounts open for at least 3 months. Just don't
Right.
apply for it right away. Have it open for like 3 months.
Okay.
Show that you can keep some money with them
Yep. Okay.
and then apply for it. You can even tell the manager, like, hey, you know what? My credit's not the greatest. I went through whatever it was,
Mhm.
right? And
Hardship.
so they'll do a letter of explanation to the underwriter. Hey, this guy has his account open with us. He's doing direct deposit. We can see his money coming in.
Mhm.
He's managing his account right.
Mhm.
Guess what they're gonna say? Give give him a line of credit.
Give them a line of credit.
Give him a line of credit.
That's a jewel right there.
Right, but to get the credit card, it gives you points and rewards.
Yeah. Yeah.
That's what you do.
Yeah. That's awesome. So what else was I gonna say?
Yeah.
That's a lot right
I
there.
know.
That's a jewel right there. I didn't
Yeah.
even know.
Yeah.
So what are some of the main credit killers that people
Yeah.
don't know of?
Yeah, and that's cool. I'm glad you asked that because it moves us into the next 2 components.
Yeah.
So
Right, we
15
didn't go through all the
right,
components. That's what I meant to say.
So the next major component that makes up your credit score is your length of your credit history.
Credit
Your
history.
age of credit. So having like accounts open for like many years is helpful to your credit. And why do I say that for? Because people who aren't educated,
Mhm.
they'll get their first starter credit card,
Right.
low limit, usually an annual fee, and then they'll get credit cards eventually go on the feature that gives them better incentives.
Mhm.
And they'll say, you know what, I'm not using this credit card. It makes no sense that I'm paying this annual fee.
Mhm.
Why don't I just, call the company up and cancel it?
Right.
And then when they cancel it, it kills the credit.
The length of the credit.
Right. So what I tell most people to do is this, call that same institution up and say, hey, can you, waive that annual fee for me this year?
Mm.
Right? Or better yet, to totally get out of it, say, hey, can you do a upgrade? Can you do a product upgrade? Do you have another credit card that doesn't have an annual fee
Mhm.
and that gives some type of incentive to a product upgrade? A lot of times, the credit card companies do that. They'll upgrade you to a better tier credit card. But whatever you do, guys or ladies who's watching this video, don't close out the credit card.
Don't do that.
Don't do it.
Do it.
You just gave up a big portion of your credit history.
Yeah. Okay.
Yeah.
So let's go through the five components of credit
Yep.
that they score you on. We got payment history.
Hmm.
We got amount owed or utilization, credit history,
Yep.
and what's for
Yeah. So number four is going to be, inquiries. Yeah.
inquiries.
So too many inquiries is terrible for your credit. Lenders don't like it.
Right.
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 So
It makes you look desperate, right?
makes you look desperate. I tell most people, like, we get it. Like, when you're shopping around for a car loan, the dealership, you know, usually runs your credit more than a couple times.
Yeah.
Let's
Yeah.
face it. I see people have 16 inquiries from a dealership, 90 inquiries from a dealership, from going to multiple ones. Those inquiries kills your credit if you have too many of them.
Yeah.
Now, we know if you shop around for a mortgage loan, you might want to go to a couple different lenders. That's why we say 1 to 3 in a year.
Mm-hmm.
And what I tell most people is this: if you really want to protect your credit and you really want to excellent credit, freeze your credit.
Freeze it.
Freeze it. Freeze your credit. Go to the credit agencies, TransUnion, Professional Experience, freeze all three. And
But
then,
if they freeze it, are they still accounting for what you're paying?
absolutely, what it is that it avoids those hard inquiries.
Mm.
When you go to the dealership, like, you're going to get one car. Why does the guy or lady pull your credit so many times? You only get one car. So if you freeze it, only let them allowed to pull one, freeze it, they can't pull anymore.
Okay.
And it gets even better. What I tell most people to do is this: freeze your credit. If you're looking for like auto loans, personal loans, things of that matter, go to the credit unions. Most credit unions only use one credit agency, credit bureau, or however you want to name it, for their loan decision maker. Okay. Only unfreeze that one.
And know you could do that.
A lot of people don't know that.
Yeah.
Right?
Well, you're educating me.
So, like, some credit unions will use TransUnion or Experian.
Mm.
So why do you want them to pull from the other two if they're only going to use that one for the loan decision maker? If they're all three are frozen, they're going to pull from all three.
Right.
But they're only going to use that one they're going to really look at to give you that loan.
So that'll just be less inquiries.
That's inquiries. That's inquiries, right?
That's awesome. Yeah, that's good. I did not know that.
Yeah.
Freeze it.
Freeze it.
Should you have it frozen all the time?
Why not?
Or is it, I don't know, is there a time that you should unfreeze it?
Only when you want to apply for something.
When you want to apply for something.
This way it stops identity theft too. Like, when your credit score is a 3, 4, 5, or 6, right? No one really wants your credit.
Right.
Because they can't do nothing with it. When your credit score gets to 700 and above, you become a target.
Mm-hmm.
You become a victim. People want to use that credit to leverage it. They can't do nothing with a 300 credit score.
Right.
They're gonna get mad at themselves.
Mm-hmm.
So if you freeze it, you gotta worry about a lot of headaches.
Yeah. Wow, that's almost mind blowing right there. I think I've heard about freezing your credit, but I didn't know it really consisted of that to where you could leverage that.
Mm-hmm.
So how does credit play a part when it comes to real estate?
Yeah, so good question. Credit is a huge instrumental piece into building wealth.
Mm-hmm.
I always tell people that, you can literally, like, be in a messed up situation financially,
Right.
and you can get out quickly if you got good credit. Because there's all types of ways to get money if your credit is good.
True.
Even for the folks that are out there that don't really have the work history to get a mortgage, they can still get a loan. They can get, like, business funding.
Yeah.
They can get they can get high limit credit cards. They can liquidate some of that and start an Amazon store.
Right.
And then pay back the credit card.
Is there an amount of how many credit cards you can have at one time?
No, there's not. You got as many as you want.
So you can have 100 grand worth of credit cards.
Absolutely.
And that's good, right? Because
That's
you're on a
not
credit
bad.
limit, right?
That's just good. That means that now you got money to play with.
So is it
Depends on how you're gonna do. You got to be responsible with it,
you
right?
gotta be
You can't
responsible.
just have the credit cards, have them open.
Hmm.
Now, don't get me wrong. Like, depending on what type of financing you're going for,
Hmm.
some lenders, depending on what finance you're going for, may say, okay, you know what, we don't know. We're gonna cut back their loan approval because you have all this untapped credit you can tap into. You
Right.
can use it at the time. But if you really understand the game of credit and you understand how you can work it to put it to work, you got nothing to worry about.
Okay. So when we're thinking about credit or just financial literacy in general, what are a couple tips or rules or systems like the 30% rule or like anything like that that you would give as advice?
Yeah, and I'm glad you mentioned that. This goes to our last 10%
Okay.
of the credit. So
Okay.
the last 10% of your credit is based on two types of credit.
Okay.
And I used to think it was good and bad, right? And that is true, but it's actually installment credit versus revolving credit.
Okay.
And see, most people have a lot of revolving credit, which is credit cards, and not enough installment credit, which is like personal loans, student loans, mortgage loans, car loans, things of that nature. You want to have a combination of the two.
Mhm.
Okay. Now, don't go out there and buy the car before you get the home.
Right. 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 That's a
Don't go
big
out
one.
there and get in debt with a loan before you get the home. Get the home first. Get that as a loan. That's an installment loan.
Yeah.
And then after that, you can do whatever you want.
Right.
Okay. So why do I say that for? Because growing up, I'll be honest with you. Like I seen people get credit cards, use them, got in trouble with it, didn't know they had to pay it back, especially college students. And they'll say that credit cards are the devil. Right? I'm never going to get a credit card ever again because it got me in trouble.
Right.
And I'm here to tell people this: that if you have a credit card and you're not using it, you're missing out that 30%. It's going to be hard for you to get over that 700 and above club. So you need to have that credit card open. You
Okay.
have a mixture of the two.
Okay. Awesome, man. Well, before I let you go, is there anything else that you would like to mention? Or
Yeah, absolutely. You know me, man. I love this.
let's
So
go.
one
Let's
thing I
go.
want to say is this: anybody watching this video, if you're in hardship and you feel like you can't pay a bill on time, your lenders will work with you.
Mhm.
Your companies, your creditors, whoever you're doing business with, they want to work with you. They want to help you. But
Mhm.
most people have this thing called pride.
Mhm.
They don't want to ask for help.
Yeah.
This is what you got to do. If you're in a situation or in a pickle and you can't pay your bill on time, call them up. Any bill, call them up. It could be a cell phone bill. Say, hey, my name is Jane or John Doe. I ain't got the bill. Right? Just like that. And say, hey, can you push my payment back for at least 2 or 3 months?
Mm.
Right? Most of the companies do that for you if you call them ahead of time.
Okay.
Not when you're behind or you're late.
Mm.
And now those 2 or 3 months is about to come to head and you still can't pay it.
Mm.
Ask, can you pay the interest only for the next 6 or 7 months? That gives you about 8 to 10 months to get your stuff together.
Yeah. Yeah.
To get your finances right, to get your life together.
Yeah.
But most people make their biggest mistake in not reaching out for help, and they have this thing called a late payment.
Mm. Late payments.
Late payments. And one late payment can drop your score anywhere from 50 to 110 points.
Did we speak about the credit score? It's only 3 to 800. How are you gonna drop your score 100 points
100 points.
from a late payment?
One late payment.
Listen,
300 to 850 is the highest your score can go to. That one late payment can cost you. The higher your score, the more of an impact it's going to have negatively.
that I think that is the most crucial part to know about credit. Late payments.
Mm-hmm.
Because credit at the end of the day, like we stated, is your adult report card, right? So it judges how responsible you are. So one late payment showing that you're not responsible, whatever the circumstances are, could bring you down 100 points.
110 points max.
110 points?
110 points. 3 late payments put you in the bankruptcy category. Now, speaking about that, I'm glad you mentioned that. In order to offset the one late payment, you spoke about having different credit cards, right? You need to have multiple open trade lines. You need to have at least 3 positive trade lines open, which is a positive count that gets reported to the credit bureaus,
Right.
you need to have at least 3 open accounts to offset one late fee, right?
I thought it just took you to have like 5 on-time payments.
Now you need to have 3 open accounts being reported. 3 open
Jeez.
accounts being reported. Some people say 10. I'm telling you based on my experience. So if you have one late payment, it's going to take you 3 consecutive payments of 3 things open to offset that one late.
Don't be late,
Do
people.
not be late.
Don't be late.
Don't be late. Yeah, don't
Oh
be
my
late.
goodness, credit is no joke.
No joke.
Joke.
But if you understand it, you can build wealth with it.
You have to be responsible and utilize it and take advantage.
Mhm.
Yes, it could hurt you, but at the same time, like what you're saying, if you leverage it the right way and if you do what you're supposed to, you'll be in a whole different category,
Absolutely.
whole different stratosphere versus if you was afraid of it. And a lot of us grow up being afraid of it. Like you said, credit is the devil to the people that don't understand it.
Right.
So man, I appreciate this
No, I
time that you
appreciate you,
gave me,
man.
this education. I'm gonna take it. I'm gonna run with it.
This is the first. This is just the first of
Yeah,
many.
yeah,
We're
yeah,
gonna come back. We're gonna do some more.
yeah.
I really appreciate you inviting me to come up here as your guest.
But tell me a little bit more about what you have going on outside of here, how you're helping people with their credit and whatever
Yeah.
else you have going on.
Yeah, so I do a lot of workshops. I do a lot of
Okay.
workshops, a lot of Zoom webinars. I'm always teaching about financial literacy.
Yep. Yep.
And like I said earlier, I got into the field. I didn't even say my story, but for the folks that don't know me or watching this live, got started in the mortgage industry in 2005, 2007 to 8. Economy took a turn, went down. Started doing credit repair during that time, but then that came like something heavily in demand. Got really good at it. Very, very time consuming, but I was great at it. 2014, left the mortgage industry and thought credit repair was going to be where it's at. And then I kept seeing people prove their credit, call me up a year later, 6 months later, I pay some right back, right? Right back again. And then I say, you know what? I know what the problem is. It's the financial literacy piece. They're not being taught how to budget, how to save, how to manage their credit card. If they really understand the true value of wealth building, they'll run through a brick wall to keep that good credit score.
Right.
But once you teach them that and show them the fundamentals of what good credit could do for you versus bad credit cost you, you got a person that becomes a good friend and become like family.
Right. Yeah. Yeah. That's an asset, man.
Absolutely.
And that's enhancing your life.
And it's enhancing their life. It's passing down generational wealth from one family to the next one.
Yeah. Yeah. That's awesome, man. I really appreciate that knowledge. I
appreciate you,
appreciate
man.
your time.
Yeah. Hey, you're doing big things.
Yes.
Yeah. I'm excited for you. I see your growth in you.
Thank you.
I see you doing really great things. You've been very consistent for this time that I've known you. You've been the same gentleman, you're just wiser.
Right. And listen, and I'm being humble, but this journey has been humbling. Like, when I first started, I was super green. I can't say that I'm not anymore, but I'm learning. But from now to from then is just a total different me because of people like you, people like my team leader Val. People,
shout out to
once you surround yourself with people who's passionate about something, then it just enhances you. And I'm so grateful to be around all the people that I am now. To have the opportunity to be doing so good and have the knowledge that I didn't have a year ago. So I'm learning so much, and I'm still going through the fire. I still feel like I'm green, right? but like you said, I've had so much success in this short amount of time just from the people that I'm around, and it's growing. And same with you. Yeah. When we first met, you wasn't doing as much as you're doing now. So it's just, but when I seen you, I just imagined that you already know how big you're going to, grow. So that's why I keep you around, and I try to learn everything that I can from you. I watch your seminars, and well, we do it together, man.
Absolutely.
And that's how it's supposed to go. So I'm grateful, and again, I appreciate you, and let's keep it up. Let's
Let's
do it
do
again
it.
soon.
All right, man. Appreciate you.
Yes, sir.
All right.
All right.